And will the Bank of Ghana's tough new measures finally bring some discipline to our financial system? Those are the questions we're asking ourselves this morning. I've been joined now by a seasoned financial analyst with deep experience in Ghana's banking and finance landscape, and his name is Dr. Kenneth Kwadwo Obeng. He is a financial consultant and also a financial analyst, and he's helping us have this conversation this morning. Doc, good morning. How are you?
Very fine. I'm doing well. Yourself?
Yes, I'm doing very fine too. Thank you very much for making time to join us this morning.
Thank you.
All right, great. We're talking about non-performing loans this morning. Maybe let's start with the basics. Help our listeners understand what exactly are non-performing loans and why do they even matter.
Well, thank you, and good morning to your cherished listeners. This morning, the topic is very important, very concerned to the banking sector and to the nation's economy. Yeah. Loan itself, before we talk about non-performing loans, we need to talk about what loans are in the first place.
Absolutely.
And how banks, conform to giving out loans and how they are supposed to be recovered. Loans are not for free. That is the first point that we need to have on mind, that loans are not for free. Basically, loans are financial services that are offered to the customers of banks and other financial institutions to enable these customers, benefit from funds from the banks, so that the bank can, the customers can also use that money to, perform economic activities that will benefit they themselves and the economy as a whole. Banks are also set up, to grant loans and then collect deposits, and then as a result of granting of loans and others, they are also able to make some kind of profit, because banks are set up to make some element of profit so that they can continuously be in business and be able to, support the customers and the nation, as the economy as a whole. Now, before banks grant loans, we know we are human, and there are so many risks associated with, the bank collecting deposits from the same customers and turn them around and give it out as loans to others who need it. Now, you give the money to somebody who needs it to go and perform economic activity only for certain factors, sometimes within and without their their confines,
Right.
are unable to service these loans. So when they are unable to service the loan, that is where we talk about non-performing
Loans, right.
If it's a performing loan, it means the customer is able to get the money, use it for the economic activity, both for himself and for promoting the economic activities in the country, and then also able to service the loan, repay at the convenient times that the bank has arranged with the person. But as I stated earlier, we are human, and sometimes we take the loan, certain factors within come about to affect the repayment of the loan. When it affects the repayment of the loan, that is where we talk about this non-performing loan. So basically, when we talk about non-performing loan, it's a loan that is classified as default. That is, the person is unable to continue repaying the installments that the person is supposed to do from time to time, as has been agreed by the bank. Because the borrower has missed scheduled payments for a defined period. And typically, when you miss your payments schedules for about 90 to 180 days. Then by the BoG and bank classifications, we'll start thinking that the money or the loan is a non-performing loan.
I see. Thank you for breaking that down. Now let's talk about Ghana's non-performing loan ratio hit about 21.8% in December 2024. With a peak of 26.7% in March 2024, which is probably the highest that we've seen in recent times. Now, how alarming are these numbers compared to regional and global standards?
Well, when we talk about non-performing loan standards, basically on the world standards, do not less than not more than 5%, basically. But in our case, we are doing around 24% currently, which means it's about a quarter of the loans that are granted by the banks are non-recoverable, or are becoming very difficult to recover. And that is a huge sum that has been pumped into the hands of people who are supposed to use it for economic activities so that it will benefit the country and the economy. These people are unable to repay. So where did the money pass becomes the subject. So if it were done with the purpose of which the loan was granted, because before a loan is granted, the purpose is stated, the bank analyzes with all its characteristics and functions to be able to determine whether the loan will actually be used by the institution, the company, or the individual to be able to recover the loan at the appropriate period that has been agreed with the bank. Remember, we said that loans are granted by banks based on savings that people have put into the bank. The bank doesn't use its own money to give out loans. They attract deposits, and then out of the deposits, they are able to grant loans. So the deposits attract a lower interest rate. Then when they give it out to customers as loans, then it attracts a higher interest rate. So within that two brackets of interest rates is what we use to service the bank's operational expenses and to be able to make some margin out of it. Right. So if the money goes out and it's unable to be recovered as agreed between the bank and the customer, then we are saying that that money is not available for the bank to be able to meet its operational expenses by way of the interest that has been put on it. And then also the bank's profit margin is also skewed in that element because the bank is also going to work under distress and will not be able to make some kind of margin that it will give to its shareholders as part of their investment that they have made in the bank. So then the third point that comes up is the fact that those who made the saving are also going to have that risk element that they will not be able to recover their money when it is due, because the monies have been loaned to other customers who are unable to, pay back what we have now termed as a non-performing loan. So if the risk of recovery of customers' deposit begins to increase, then it means the economy is at risk because people's money are likely to be lost as a result of other people not repaying the loans that they have taken. The fifth point I'll raise about it is the fact that the economy is going to suffer based on the plans that we have done in economic management. The point here is that institutions are put up to drive certain economic indicators or activities that will bring the overall economy to a level. So if institutions are borrowing and for some reasons they are unable to repay, then it means the plans that we have made all in the economy that, let's say, cement production will increase by X, so that it will sort of catapult the construction industry to an XI or X1 level. And now, if institutions within that bracket are unable to deliver due to normally certain factors, because certain factors cause this non-performing loan, which I believe will come.
Yeah, we'll come to that. Yeah.
Yeah. So if these factors prevent them from meeting their targets or contributing towards the economic development, then it is going to affect the overall growth of the economy as a result of their inability to, perform their activities, and then, creating value into the economic chain for the economy to grow by those levels. It tends to affect the overall build-up of the economy.
Right. Doc, what does such, so we're seeing that it's almost maybe five times the global standard, which is 5%. So what does such a high level of non-performing loans mean for ordinary businesses and entrepreneurs who are looking for credit?
We say once bitten, twice shy, or something like that. Because if the banks are unable to recover their deposits, their loans, it's a very big issue within the banking sector. A very, very big issue. And that is the reason why before you grant a loan, you would have done all the assessments, all the evaluations, and make sure they conform to standards of granting out the loans. So the point is, it stifles the banks from recovering the money from their customers and then making it available to others, because the loans are all not demanded at a time.
Right.
The loans are demanded from time to time and by period to period by individuals, institutions, and companies, and so on and so forth. So when we give it to you as a loan, you are supposed to repay by the payment terms, and these are all assessed so that the banks can get the necessary liquidity flow back into their mainstream to be able to loan to others. So if you borrow and you are not able to pay, you are preventing others to also having access to the credit. And that is a very serious issue. And apart from you preventing the others from getting the credit, it means also stifles the bank liquidity standard. And by way of reporting and others, it certainly affects the operations of the bank as it stands to non-performing loans.
Right. So we see that businesses and entrepreneurs who are looking for credit also tend to suffer from that. Now, Doc, let's talk about the causes really. What are the root causes of rising non-performing loans? Is it mainly macroeconomic shocks? Is it weak governance or some maybe borrower behavior across the country?
Very big question. Very, very big. The causes of these non-performing loans, I have thought about it severally. Of course, we have the book causes, and then we also look at circumstances.
The realities.
Yes, the realities, exactly. That is the point. We have all the book factors that cause these non-performing loans. The risk assessments, the market trends, the macro and microeconomic indicators, the market trends and others. So when you are going to borrow, we have all the C's that are factors in determining how to grant loans to, the customers, the credibilities and all that. So we need to go through all these factors, analyze them properly based on the request that the customer might have made. Unfortunately, sometimes it doesn't happen that way. As I said, we are human. We have human beings working at the banks, and then those who are also coming to borrow are also human beings. So the risk element is high when you are unable to properly assess the request for the loan. And that is the major factor that causes the non-performance of these loans. Because if you don't assess it as for how credible the person is, the credibility and others that you need to contribute for the loan to be granted. If it's not done properly, it's not analyzed properly, it's not checked properly, and the loan gets into the wrong hands, then you can be sure the repayment will be a challenge. And then also,
Doc, just before you move on, Doc. Yes. Just before you move, so what if I get you well? What you're saying is that some of the banks are failing to do their due diligence when it comes to risk assessment, isn't it?
Exactly that. Exactly that. And you know, the banks are also in competition. The banks are also in competition.
Yeah.
You know, their shareholders and their boards give them the necessary criteria, the indicators, and then yearly performance standards, which they are supposed to achieve some element of profit on their returns. So the banks also move into action to try and, you know, attract the deposits and then also give out the loans to be able to meet their plans that their boards and owners have given to them. And then also we have all these other banks also going through these same challenges. Now the market is sometimes very choked because many people would have borrowed, and it depends on the period that they will be able to repay. That they will be able to take loans again. You know, the loan has a gestation period. So if the period is long, let's say you have taken a 4-year loan, a 5-year loan, or probably a 10-year loan, depending on the, you know, the customer and the purpose of the loan. Until the person completes the payment, unless certain situations come up where the loan may be, you know, reevaluated and then probably others added to it to get the business of the person going, depending on the banker-customer relationship, sort of. So before the person repays, it takes a long period. And that long period is a period that risk assessments are very difficult sometimes because of internal and external shocks that may come about as a result of economic management of the country. So assessing risk over a long period becomes a bit of a challenge. So if the customers are not able, or the bank is not able to assess the loan properly into the long-term future and economic imbalances as a result of certain shocks that come out from most of the countries that we depend on, especially, you know, the oil market, probably some kind of diseases and others that came in, like the COVID and so on and so forth.
Yeah.
These are long-term effects that sometimes the risk assessments become very difficult. So when they affect the loan, then surely the repayment becomes a challenge. And then we have the human factors, that we have people who are perpetually difficult customers. Then when you give them loans, they go and, you know, mishandle the loan or misapply the loan. So by the time you pursue the person as for the loan repayment, it becomes an issue. And then, of course, we cannot forget about some kind of collusion that sometimes exists between banks and then their customers. In the course, sometimes there are some element of collusion, so that loans are granted without, you know, the basic risk assessments and others. And when the collusions come up and the loans are granted, then the repayment also becomes an issue. So we've mentioned some of these external shocks, some kind of imbalances in the economy, determination of interest rates and others that, you know, sometimes are beyond the bank's efforts, because when government is controlling inflation, when government is controlling, exchange rates and others, most of these indicators are outside the bank's jurisdiction, and these affect the performance of the loans because it also affects the performance of businesses.
Right.
And when you give money or you give loan to a business and certain factors come in and affect the business operations, then it becomes difficult for the institution or the company to be able to repay the loan, even including individuals. Because when individuals, you give loans basically sometimes based on your salaries and others, some percentage of your salary, normally not beyond 50%. This 50% sometimes is calculated in some skewed ways by either the banks or the beneficiaries. Some add overtime and other factors that are not constant on their wages.
Right.
And when you add overtime and other recurring earnings, and you look at it to give or to grant a loan to a customer, then you are risking the repayment. So assuming the person depends on overtime and add the overtime to his basic salary, and you, the bank, also you go and calculate that as a total basic salary, and you do the 50% and you give the person the loan, and the person becomes incapacitated in one way or the other to be able to perform additional overtimes, or the person is moved from that function, which will no more earn him the additional income that he is expecting, then of course you have to understand that the loan is likely to be a non-performing loan.
Right. I see. Okay, so let's talk about now the crackdown. Let's try and dissect the crackdown. But just before that, exactly 35 minutes after 9, this is Business Breakfast on Z. If you just tuned in this morning, we're talking about the non-performing loan issue and the crackdown by the Bank of Ghana. Bank of Ghana has put in place certain measures, certain things that they believe are going to help us cut down the non-performing loans. And that's what we're talking about. My guest this morning is Dr. Kenneth Kweju Obing, and he's a financial consultant and an analyst helping us have this conversation this morning. I'd love to hear from you if you're listening to me this morning. Send me a WhatsApp on 0544321019. 0544321019, and I will give you the opportunity. I'll read your messages for you. You can as well call me on 030-3956-641, 030-3956-641, and then I give you the opportunity to share your thoughts. We are streaming live on Facebook at ZFMGH and also on YouTube at Z Multimedia. Please engage our post, and then we'll read your comments for you. Doc, let's continue the conversation. Let's talk about the crackdown, really. What exactly the Bank of Ghana is putting in place to help deal with this particular issue. Now, the Bank of Ghana now requires banks to name and shame willful defaulters in newspapers and online. Doc, do you think public shaming is an effective deterrent? Considering our context.
I'm surprised. I'm surprised about that point or that measure that the Bank of Ghana wants to put in place.
Why?
Remember, non-performing loans sometimes can be rearranged, can be repackaged, and get into a performing loan. What I have observed is that banks are very rigid on standards, white paper procedures, A, B, C, D, E. And they are not normally ready to alter the process because of, reporting relationship up to the top. And sometimes, you see, I look at institutions like credit unions and then banks.
Yeah.
I've been privileged to serve on the board of Hydro Credit Union in Kosovo, which happens to be about the second largest credit union in Ghana.
In the country, right.
Yes. And the difference between credit unions and banks are basically the fact that credit unions are member owned and they do every activity themselves. They raise their own savings and are able to give out credit to their members based on guarantees and others for purpose of repayment. Banks are institutions that are set up by shareholders with the purpose of making profit. So things are rigid. Rules are rigid.
Yeah.
If you take a loan and you are unable to pay, these are the measures. Sometimes even taking you to court to try and recover the money. And then also you have the banker-customer relationship.
That's true.
Which has certain rules and regulations.
Yeah.
And it also includes that you certainly don't divulge certain operational activities to other parties or outside without, the intervention of the courts. So if you say you are going to name and shame the person either in the newspapers or on the social media or on the print and so forth, then where are we coming from? Are we going to seek permission from the courts to be able to do that as a result of breaking the banker-customer relationship principles? It's a question. And then also, I'm wondering that if the person has been unable to pay and you put it in the newspapers, does it mean that it marks the end such a way that the person will no more pay the amount or what? That is the second concern I have. And then also, it will deter other people from going for loans, because loans, as I said, on the long-term basis, the risk elements as we face in this world of today are such that you are unable to properly assess the loan long into the future, where interest rates are changed or changed from time to time for economic management and that kind. So if somebody took a loan, and the banks are such that when they they give you a loan at a specific percentage rate, when the interest rate comes down, they don't change the rate down as it is. When you take the loan, let's say at 35% today, and then the next week, BoG has revised the interest rate downwards, it doesn't affect the 35% loan you took, because that was the prevailing interest rate at the time that you took the loan. Because banks also, as I said, it's a profitable institution. So if they give you the interest rate and the rate drops, they will have other alternatives as for how to utilize their funds. So it doesn't mean that they go and reduce the 35% that they gave you as the loan that you took. And remember, when the interest rate drops, it affects economic activities by way of prices and others. So if you borrowed to go and buy some items at that interest rate, and you come and the price has dropped, meanwhile the interest rate that you use to borrow the loan remains as it was, how are you going to recover the money that you have put in at that interest rate to be able to repay the loan? So non-performing loans are some of the factors, are the unstable, economic parameters that may be existing in a country at a time.
Right.
So if you take ours, for instance, that are nearing about 1/5 of the loans granted, it amounts partly to the fact that we don't have stable, economic indicators. Now, dollar used to be around 16, 17 cedis. We turn around the past 6 months period, and the dollar is 10 cedis to 11 cedis or something. So in this case, those who bought items at the time that the dollar was 17 cedis, using some loan that they took at 35% interest rate or more at that time, Now the goods also don't get sold within a short period. Now our case, within 6 months, our indicators have all become very, volatile. So that as we speak, that dollar is about 10.8 cedis to a dollar. Meanwhile, it used to be 17 cedis. Look at the difference. So if the person bought those items at that time, how much is he supposed to sell it? So that he'll be able to recover the amount that he spent in buying the items, plus the interest rates that are also beginning to fall. They are good indicators. I have been listening to the governor. We even had a section at the Chartered Institute of Bankers recently with him on all these exchange rates and other indicators, where he boldly stated that we have to accept that economic management doesn't always mean that there will be rising interest rates, there will be rising foreign exchange rates, there will be rising, inflation. It is time that we Ghanaians start building into our economic planning that there can be also a reduction in exchange rates, there can be a reduction in inflation, there can be a reduction in interest rates. And these are the fundamentals that can propel an economy. Because when the indicators are high, certainly the economy will be in a hyper.
Right.
But when the government currently with BoG are working towards reducing these indicators, it is also going to affect those who have taken long-term loans that are creeping into this current fall in the fundamentals of the economic indicators. So you see that it's likely to affect the ability to repay the loans. And therefore, non-performing loans are even likely to go up as these indicators come down while we are trying to stabilize the economy. So it's going to be a transition period that if banks don't manage their loans properly, by, as I said earlier, be able to identify customers that they can repackage the loans, they can rearrange their loans so that it can meet the current economic challenges. Otherwise, most people are likely not to be able to pay their loans. And naming and shaming them if some people who don't have that credibility or who don't think about their integrity,
yeah,
take their loans, and if your decision is only to name and shame them, you come into the newspapers. After all, how long do we read newspapers? Just a day. After the day has passed, you don't read the newspapers again. So when you put my name there that I've taken a loan of about 10 million and I've not been able to pay, so I'm ashamed by it. One day, the people read the news and then it's gone. They won't go for that newspaper or they won't look at it again.
That's
the
true.
thing has passed. And it's not even everybody who will even read it anyway. So if the understanding is that when you name and shame and because of that you are forgiving me of the loan, then I will not care for you to name and shame me. That is very interesting, actually.
Very, very interesting. Very interesting.
I really think that there are procedures for, recovering these loans. And as I mentioned, banks have to start thinking about or planning to, recapitalize, arranging some of these loans with those they know are becoming non-performing, and then grant them the opportunity to be able to adapt to the changing economic trend. So as the governor said recently at CIB Ghana, we have to start rethinking. Banks have to start rethinking. And then they have to start replanning in ways that will give them the strategies that will be able to counter as the government and BoG try to stabilize the exchange rates, the inflation, and then also the interest rates. And then also the courts unfortunately, at this part of our world, the courts sometimes are unable to, meet these challenges, because we have commercial courts. But my brother, if you have your case at commercial court, the time it will take, plus the costs that go with, the court case period, are so enormous that sometimes you may even have to decide not to follow the debt at all, because you even end up incurring more debt, following on these debts at the court. So our courts should be able to build up fast-track courts that can, look at some of these cases properly, so that you can recover the loan. We see that people use properties as guarantees and others. How solid are these guarantees when it comes to recovery? And it becomes a challenge. So there are processes and procedures that we can recover these non-performing loans, and those are the ones that we need to, try and push for those ones to be able to help recover those loans, instead of the naming and shaming. As for the naming and shaming, as I said, even if I were the one, you name me one day, and then the next day the loan is written off, then I'm gone. After all, it's not everybody who even read the thing anyway.
Right.
So I think it's not effective. It's not at all. So let's go by the traditional ways of recovering these loans, especially using the courts. And we should have some kind of fast-track courts. We should have, a leverage on legal fees, and then, the processes that can enable all those who take these loans and then they are unable to pay, will be able to do that. And more importantly, that kind of recapitalizing, especially these SMEs and individuals who are involved in some of these small businesses. Let's try and see the banks developing strategies that they will be able to, recapitalize them, so that they can turn around as a result of changes in the basic economic indicators that we have always been talking about as of these days.
That's very in-depth. Let's talk about the other things. It says that they also said that borrowers who default more than once in 10 years will face a 5-year ban from accessing credit. Could this be too harsh, especially for small businesses hit by maybe some unexpected shocks? And from the things you mentioned, the causes, you indicated that sometimes there are things beyond their control. Could this be too harsh?
Well, it's harsh in my opinion. In fact, even as you were reading it, I was also looking at it from my data.
Right.
I was just smiling over the whole thing. That that is the meaning of preventing the person from taking additional credit. And my even worry is that my worry is that, do we even have the data of people who have taken loans, and we are saying that we have banned them until another 5 years that they can take loan again?
Yeah, I think there's this platform that they check on, isn't it?
Yes, there's this credit. Yes,
I've forgotten the name. Yeah,
it doesn't work. Surely it doesn't work.
Oh, really?
Yes, because I've told you that the banks themselves, they are in competition, and the customers also have various banks that they deal with. There are various banks that they deal with. Yes, so it's not like the developed countries. In the developed countries, most people seldom have more than one bank account. They seldom have more than one bank account. That is why recently there was a huge concern by the Minister for Energy on the number of bank accounts that ECG has got, and was threatening to close almost all of them, and so on and so forth. Outside there, people don't open so many bank accounts, unless people who want to deal in this money laundering and so on and so forth. So if you have more than one bank account outside there, there's always an eye on you as for what you do here and what you do at the other side. But when you come to our jurisdiction here, we have more than so many bank accounts. So when the credit ratings are being looked at to try and determine whether you have taken a loan from one side there and you are unable to repay and you are performing other activities on another bank. So you see, the point is, once you have even banned him here, why is he even having a non-performing loan at one bank while he has another bank where he's operating? You get the point?
Yeah.
He has another bank there, another bank that he's operating an account. But like if the person were to have only one bank account and he's been declared as his loan is being declared as non-performing, then we all know that it is really non-performing. But the person has about 3, 4, 5 bank accounts dealing with different banks. How does one bank here become, the loan at one bank become non-performing? Why don't we fall on the money at the other banks to be able to repay? And that is why I was talking about the judicial process. Because if he's not able to pay, the judicial process, if it is fast enough, you should be able to quickly get the courts to look into his activities, operations, so that we can know that he has about 3, 4 bank accounts. Then quickly we can land on those ones and then use that money to repay the loan. So in that case, there will be no non-performing loan.
Right.
I hope you get the point.
Yeah, I get a point.
Yes. So it is because we have opened up for so many bank accounts to be opened. It's where the
challenges, right?
And when a challenge is there like that, it becomes difficult for you to trace the person's assets to be able to recover them to repay the loan that has become non-performing. So we should be able to move out from the idea of opening so many bank accounts by these institutions, because you can't go and touch that bank account unless through the court. And the going to the court too is another story altogether.
A long process.
I mean, it will take for you to do that. So, question is, banning the person for the next 5 years, he has already taken another loan at the other side, and it doesn't affect him in one way or the other. So what are we talking about? Yes. So now that we have the Ghana card as the basic, we should be able to strengthen the Ghana card as the basic identity, and then we can use that to trace, linking them with bank accounts and others. We can use that to be able to trace people's assets that are scattered at all the other banks. Why are the banks not collaborating to say that, oh, that's my customer who says, who you are saying he owes you X and it has become non-performing? He has money with me. Why don't that? He has money with me, so let's fall on that money for you to be able to repay your loan. But as I said, there are this banking customer relationship. There are principles with it. You can't divulge so much information relating to the customer.
That's true.
I mean, the bank also do that.
Yeah.
So, and resorting to the.
Hello, Doc. Hello, Doc. Hello. Hello, Doc. Can you hear me, please? Hello. All right. I think the network is a bit shaky. Hello. Hello. All right. So we'll try and connect Dr. Obin very soon, and then we can continue the conversation. The network is not so stable. Hello, Doc. Hello. All right. So yes. So that was Dr. Kenneth Kwajo Obing, and we're having a conversation this morning on the non-performing loans. We're trying to tackle. I mean, the big question is whether the BoG crackdown is enough in tackling the rising non-performing loans as a country. And Doc has said a lot of things. He says that the condition or the measure that has been put in place by the BoG to ban people from taking loans, I mean, if they default. So according to the Bank of Ghana, really, the borrowers who default more than once in 10 years, they will face a 5-year ban from accessing credit. And he says that you can stop one person. I mean, if the person has multiple accounts, they can be taking loans with one particular account. And so even if you ban them on that score, they can use other accounts to access financing or to access credits and all of that. So the ideal thing to do is actually to deal with the fact that people are able to create multiple bank accounts and all of that. And so that particular one, Doc doesn't necessarily agree with that completely. And the other issue about whether naming and shaming is the way to go, because BoG says that banks are required to now name and shame willful defaulters in newspapers and online. Now, by willful defaulters, even that particular expression, how do we draw the line between somebody who is a willful defaulter and also somebody who is actually unable to make their payment, to make their repayments based on certain conditions that they are experiencing? How does that even work? And so those are some of the questions on my mind. I hope that we get Doctor again, and then we can continue the conversation. Hello, Doc. Are you with us now? Hello, Doc. Hello. Hello, Doc. If you're speaking, you are muted. Kindly unmute and then we can speak. Hello. All right. Our time is also fast spent. I hope he comes back maybe to give us his final thoughts before we go. Yeah. So that's that basically. Doc says that he doesn't fully agree with those two directives. I was going to ask him some of the other directives. Now, according to the Bank of Ghana, they want the banks to reduce their non-performing loan ratios by 10%. I mean, to 10% by 2026. Is that even realistic? And I wanted to ask Doctor that one before we go, but because of the network, we're unable to do so at the moment. Okay, I think he's joined now. Hello, Doc. Hello. Hello, Doc. We're unable to get him to join the conversation now. I think we'll have to then wrap up now. Hopefully, we get to continue this conversation because there's so much to unpack. I mean, the impact on businesses and entrepreneurs really, and also the banking sector and investor confidence. We can also talk about the human side and also the ethical dilemmas. Whether the naming and shaming is even consistent with the principles of financial privacy and dignity. These are all questions that we can actually explore. Hopefully, we can get Doctor back again, maybe one of these days, maybe not, if not tomorrow, one of these days, and see whether we can continue this conversation. But thank you very much for staying throughout this conversation. We have to wrap up now. Our time is fast spent. It's been a great conversation here on the Business Breakfast on Z101.9 FM.